at 9:30 a.m. in New York, a trader clicks a button. In less than a second, $50 million moves from one institution to another. No cash, no trucks, no vaults opening, just a number changing on two screens. Now here's the uncomfortable part. That money moved instantly, but the reason it was allowed to move took decades to build. Because money is fast, trust is slow, and the entire global financial system lives in the gap between those two speeds. Right now, money has never moved faster in human history. Trillions of dollars cross borders every single day, most of it overnight, most of it invisible. Yet at the same time, governments are more suspicious of each other. Banks trust fewer counterparties. Markets panic over rumors instead of facts. So today we're going to talk about a strange imbalance at the heart of modern finance. Why money could move at the speed of light, while trust still crawls at the speed of human memory. And why that mismatch is becoming dangerous. Let's start simple. Imagine lending your friend $10. You don't write a contract. You don't demand collateral. You hand over the cash because you trust them. That's it. Trust first. Money second. Now scale that exact idea up to the global economy. Banks lend to banks. Countries lend to countries. Funds lend to governments. But instead of $10, it's 10 billion. Instead of one friend, it's institutions you'll never meet. And instead of trust built over years of friendship, it's trust built on rules, reputation, and past behavior. Here's the key idea most people miss. Money does not move because it exists. Money moves because someone believes they'll get it back. That belief is trust. And trust is not digital. It's not instant. It's not automatic. It's built slowly, then lost suddenly. So how do we create a system where money moves instantly anyway? The answer lies in plumbing. Boring, invisible plumbing. Every day, banks lend massive amounts of money to each other for very short periods, sometimes just overnight. This isn't long-term investing, it's survival. A bank might have plenty of assets, mortgages, bonds, loans, but at the end of today, it might be short on cash. Not bankrupt, just illiquid. So it borrows from another bank, just for the night. Multiply that by thousands of banks, across dozens of countries, every single day. This is how money actually moves, not through consumers, not through headlines, but through quiet, short-term trust between institutions. And here's where speed enters the picture. Over time, we automated this trust. We created systems where computers check balances, collateral, and creditworthiness in milliseconds. If the boxes are ticked, the money moves instantly. No conversation, no hesitation, no human pause. It feels safe, efficient, modern. Until you realize something uncomfortable. The computers are only enforcing trust that already exists. They are not creating it. That trust was built slowly, through decades of stable behavior, predictable laws, central banks that acted as backstops, governments that paid their debts. History, basically. Now let's add one more layer. Collateral. Most modern money movement isn't based on pure trust. It's based on, if you fail, I take this. Government bonds, high-grade securities, assets considered safe. These assets act like trust in physical form. But here's the irony. The faster money moves, the less time anyone has to question whether that collateral is still trustworthy. Speed hides doubt. When everything is calm, nobody notices. When stress hits, everyone notices at once. That's when trust shows its true speed. Think about a financial crisis. Any of them. The 2008 crisis. The European debt crisis. The COVID market freeze. Money didn't slowly stop moving. It slammed on the brakes. Not because money disappeared, but because trust did. Banks stopped believing other banks were safe. Investors stopped believing assets were liquid. Countries stopped believing promises would be honored. And suddenly, systems built for speed became systems built for panic. Here's the uncomfortable math. Trillions of dollars move daily on the assumption that tomorrow will look like yesterday, that contracts will be honored, that collateral will hold value, that rules won't change overnight. Those assumptions are never written in code. They live in human belief. And belief does not scale like software. We like to tell ourselves that modern finance is rational, objective, data-driven. But under the surface, it's emotional. Fear spreads faster than spreadsheets. Rumors travel faster than audits. And once trust cracks, no amount of liquidity can fix it quickly. Central banks know this. That's why they don't just inject money during crises. They inject reassurance, statements, promises, whatever it takes. Because they're not fixing money problems. They're fixing trust problems. Now let's talk about today. Money is faster than ever. Payments settle in seconds. Trades clear instantly. Capital flows globally without friction. But trust is under pressure. Geopolitical tension, rising debt, political interference in central banks, sanctions turning money into a weapon. Each one chips away at the slow foundation trust depends on. And here's the quiet risk. The faster money moves, the more damage happens when trust breaks. In the past, systems moved slowly. People had time to react, to talk, to adjust. Now, by the time humans notice a problem, the machines have already moved billions. Speed amplifies mistakes. It amplifies fear. It amplifies disbelief. So we're left with a system where money behaves like electricity, but trust still behaves like reputation. Slow to build, easy to lose, hard to repair. And that raises a final question worth sitting with. If money keeps getting faster, but trust keeps getting weaker, what happens the next time the system is tested? Because when money moves instantly and trust doesn't follow, something has to give.